Okay, imagine this. You watch the Dow Jones fall, a staggering 90%, over just 3 years.
Yeah.
That's not just a dip, right? That's your retirement vanishing month after month. That's the stark reality of the 1929 crash.
It really is the ultimate financial nightmare, and Andrew Ross Sorkin captures it, well, just brilliantly in 1929, inside the greatest crash in history.
Right. Author of Too Big to Fail.
Exactly. And he spent, what, 8 years on this, digging through private records, even undisclosed Federal Reserve notes. Serious stuff.
We've boiled down all that research into, basically, 5 huge insights. So here are the most game-changing essential insights from the book Practical Wisdom that could really transform how you think and act.
And it's urgent now, too. You hear leaders like Jamie Dimon at JP Morgan pointing to today's markets, the AI buzz.
Saying things look concerning, historically speaking.
Understanding 1929 gives you that crucial context for right now.
Okay, insight number 1, the seductive illusion. There's this quote from Pat Bologna. He was a shoeshine boy turned investor.
Oh, yeah, describing Black Thursday.
He said, "Everyone is yelling. They all want to sell. The board can't keep pace with how fast stocks are falling. Just chaos."
Pure chaos. And the illusion that this time is different. Sorkin shows the crash was driven by, well, it was 2 things, really. Reckless debt from ordinary folks and catastrophic debt from the big funds.
People putting their life savings in based on rumors.
Exactly. While these investment trusts, like the Goldman Sachs Trading Corporation back then, they were using insane leverage. Pyramid schemes, basically.
And when you say leverage,
Yeah.
we're not just talking simple margin buying.
Oh, no. We're talking betting maybe $10 for every $1 they actually held. It was this mindset of, go big or go home, but on a scale that just amplified every loss, made it catastrophic.
That kind of thinking, that arrogance, it leads right into the second point, the human cost of financial hubris.
Right. This wasn't just numbers on a page.
It really busts the myth of paper wealth versus real value. When it vanished, all that was left were, well, flawed human assumptions. Sorkin talks about how skeptics are just shouted down, ignored.
Yeah, the pressure to get in was intense. Social pressure, even. He mentions this anecdote. Wives were questioning their husbands about why they weren't capitalizing on the opportunity.
Wow. You hear echoes of that today, don't you? With tech, crypto,
Yeah.
that fear of missing out.
Totally. FOMO driven by seeing what others seem to have, not by looking at the actual fundamentals. It's about critical thinking, assessing risk that applies always.
So this pattern, this delusion, Sorkin argues it's cyclical, part of a bigger pattern.
That's insight number 3, the cycles of speculation. He found that every major crisis shares these common threads.
Like what?
Believing the old rules don't apply anymore, ignoring clear warning signs, and this is the big one, debt. Massive amounts of debt fueling the speculation.
He puts it very bluntly, doesn't he?
Yeah, the quote is something like, debt is the almost singular through line behind every major financial crisis. Simple, powerful.
And understanding that pattern, well, that gives you a lens to maybe spot the next one coming.
Right. And speaking of reflection, this is Mindful Moments, our YouTube channel. We offer AI book analysis, summaries, critiques, all aimed at inspiring reflection and rational thought.
Okay, moving on. Insight number 4, the battle between Wall Street and Washington. The crash didn't just break the market, it fundamentally changed government.
Oh, completely. It basically created the modern regulatory state overnight. Before 29, Wall Street largely policed itself.
That didn't work out so well.
Clearly not. The crash forced the government's hand. They had to step in with oversight, new agencies. The alternative was total collapse. It proved markets can't always self-correct from that level of leverage.
And that tension, regulation versus free markets, it's still playing out today, right?
Absolutely. The arguments haven't fundamentally changed.
All right, finally, insight number 5, warning signs we ignore at our peril. It's chilling the smartest people saw it coming.
They did. Sorkin documents analysts pointing out the dangerous speculation, the manipulation, months ahead of time. But their warnings, these disregarded alarm bells, they were drowned out.
Why? Too many people making too much money.
Pretty much. Those profiting from the boom just didn't want to hear it. Learning to actually listen to those signs, to act on them, that could save the next generation from repeating it all.
Okay, so those are the 5 key takeaways. If this grabbed you, remember this is just the quick essential insights rundown.
A starting point.
Exactly. Start here, then you can explore the in-depth analysis. After that, we've got the summary, and finally, the comprehensive critique.
Subscribe and nourish your mind on the go.